Welcome and thank you for clicking on my video. The reason that I'm putting this video out today is because enough of these macro signals have confirmed that it is leaning towards the real stock market crash, and that is a very, very scary thing. And I'm not here to scare you or anything like that. We're going to talk about the shorter time frames and talk about how things can go higher, because we do see some stocks showing some basing out. But we are seeing a lot of confirmations on macro scales of bad things happening, and we have to be aware of that. And that's what we're going to talk about in the beginning of this video before we get into those shorter time frames. Like I said, this is not to scare you. It's just this is why I made this channel. This is genuinely why I made this channel, was to see things like this and help people not get hurt by the market, help retail traders understand when signals look bad, and therefore you need to be very careful, because you're seeing a lot of signals start to confirm right now that are saying bad things. It doesn't mean that we can't go through those shorter time frames and see some upside. We're going to do that after we talk about these things, but you're noticing here for the SPY, we do have what you would see as a flat divergence and a big divergence across, right? Big divergence across, flat divergence. So multiple point divergence here pretty much for the SPY. And then we go over to something like the Qs. And what are you noticing here? Well, we're not really having the divergence points, right? But we are setting up that lower high, and that is confirming as of today. So this is why it's a little bit more worrisome now, is because previously you did not have that little red bar in the histogram. Now you do have it. Obviously, this is just something to be aware of. The volatility is breaking out. We're going to talk about that in a second, but I just wanted to show you how that has curled over, and volatility is starting to break out of its big downward trend. So we have to pay attention to it. Now, the main two reasons are these two things that I'm going to show you next, why I believe this actually can get ugly, and we can buy ourselves more time. There's always a way to buy ourselves more time. We just need to see more price action, but this is really how we have to treat it right now. We have to treat it with an extreme amount of caution, and then if we see reversal signals that can turn us back up, then we will be paying attention to that. But the XLU, okay, utilities. At the major tops, a lot of the time you will see the SPY and utilities make a divergence at the same time, and you see that right here on the daily scale. Now, when this is really going to add up to be like, okay, this is going to be a crash, is more on the weekly scale for a lot of these stocks, and we're going to cover that probably on Saturday. So make sure you're subscribed, and please like this video so more people can see it, because you need to be aware of these things. There is a way to go up in those shorter time frames. I want to keep saying that. I don't want to fearmonger into thinking, hey, this has to go down tomorrow. There is a way to go up, but we could see that as some kind of trap, and we're going to pay attention to it. But XLU does have a major divergence point here, major divergence for the RSI. And we're noticing that if you look, there's no divergence into here, but look at that RSI pointing down, and then this thing just shot down today, confirming that on your MACD. So this is a time to pay close attention, because all of this is happening while volatility breaks out. Now, this chart is huge. Apple is a massive stock. Apple is a stock that I have traded a lot, and when it has weakness, you have to pay attention to it, right? This is my most traded stock in my whole trading history, and you're seeing this break down. And the key thing here is to understand this point right here for the MACD. It comes at the close of the bar here, which is very close to these highs. So I am willing to say that this is bad, and this could be even a triple divergence here for Apple on the daily scale. Even though we had basing out signals, those did not play out. Those are breaking down. We could not buy back up. The buyers did not step in that area for the cup and handle to play out. We even got a fake out at the top. All of this is saying trap at the top, and we most likely will see something very bad to the downside. Now, if we start to curl back up and things like that, we will discuss it on this channel. But as we look forward, we want to pay attention to even more things that are adding up. And I'm just trying to prove to you this is not good on the macro scale. That's all I'm trying to do with the first part of this video. Tesla, we can notice this. Now, this curled over a few days ago. The key thing with Tesla here is I want you to notice how these are meeting at the same place. This still can be a cup and handle, but because this is a daily divergence here, and it is very significant, you have to pay attention to it, because that can easily head down very quickly. If we can chop below these lows, we can end up back down towards something like 140. That would be a 100-point drop for something like Tesla. Okay, so we want to pay attention to it. We're going to go into the shorter time frames in a moment. One of the other things I wanted to talk about was the dollar as well, basing out with those basing out signals that we saw, and a rejection divergence on the daily scale. Very significant on your RSI, very significant on your MACD at the same time. That is another one that is saying, watch out. This is where I believe this is probably the most signals that I've seen for some bad stock market behavior, for some selling to come in a long time. It does not mean we can't go higher for the time being, but watch out for traps because these have confirmed. And if we don't get rid of these signals, this is going to be a very bad thing to see to the downside. I'm not hoping it is bad. I do not want it to be bad. People's lives get pretty much worse, right? People's stock market portfolios suffer when this happens. I'm not wishing for this, but these are bad signals. We've been paying attention to them, and now we're seeing things start to confirm on the macro side to the downside. So the dollar based out, we saw the 4-hour and 2-hour divergences in here saying, hey, that thing's going to rip, and it is ripping. Why are people flying into cash really, really fast? Okay, so we're going to pay attention to if we do get a bounce, if we see some rigged behavior tomorrow during the live show. Thank you so much for joining. Please like this video so more people can be aware of this type of behavior. And then we go look at volatility, and volatility was something that I believe hasn't fully done the signal yet, right? We haven't fully broken through this trend, but for the most part, we would say we were looking for those reversal signals to prove themselves today, and they started to, and then they turned right back up. So volatility is not messing around right now. Volatility is here. It is above 20, so we're going to see some big swings. That could mean maybe we see a reaction to the upside, but it does also mean, hey, that could just be some kind of trap. So we have to pay attention to that kind of behavior, and now we're going to get into the shorter time frames. Yesterday's video, we mentioned how this point right here is very, very important. And if we lose it, that's still my belief at this moment, that this point right here at these lows is very, very important because you do have a cup and handle proving itself here. You may even have a head and shoulders to the downside, and that daily has already crossed a few days ago for the SPY. So we're paying attention to it. But for the most part, we were saying if the 2-hour cross is here, watch out, because that means a probability of something bad coming is there. The probability of something bad coming is there. You know where that weekly and daily expected move are pretty close to each other. You do have for the daily expected move upside, you have 572.67 to the upside. That is what the options market has priced in for upside tomorrow. And then you do have 562.93 to the downside. Now the key thing we were paying attention, if this crossed, which it has, is does it take out this low? If it does, we can reach down to that weekly expected move. The key thing about this weekly expected move down here is the fact that this would be the overall bigger cup and handle that we can see as maybe a trap in the future that turns back down. So this is going to be something very key to pay attention to, that 2-hour chart. All right. The 30-minute, something I wanted to look at here was if we're going to want to get rid of these signals, you have to get a 30-minute to pretty much turn up from here. You have to turn up from here, and you most likely will have to see us reach above this trend between these highs, really solidify like, hey, we are not going to test the actual low. Maybe we'll dip into it for a brief moment, but you don't want it to hang out down there long. You do not want to break that level, because once you break it, you will gravitate towards that weekly expected move, and maybe you see a bounce, but that can, even on just a little 30-minute, it can just be a dead cat bounce that then leads to more downside. You are going into negative territory on your MACD. You are below the center line for the RSI. These are not good signals even for the shorter time frames on the SPY, and you have confirmed macro signals that say we might go down pretty damn fast. We talked about this with the Qs, and we'll give you those daily expected moves first. We do have 487.49 to the upside, and we do have 476.71 to the downside. The key thing for the Qs was, are we going to react and break down through these lows? That's really the thing we're paying attention to at this moment. You can see that's the perfect place to get that cup, and this would be a pretty massive handle. So if that does break that low and you're not able to hold up in this area, you might react a little bit lower and go down towards something like 471, because that would be the overall bigger cup that then gets a handle for that dead cat bounce that then falls one more time. Now we're just trying to read into these signals the best we can. Everything is starting to point down, so you have to be a little bit cautious with these type of moves. We are seeing reversal signals in something like Amazon, and we're going to talk about that in a second. And Apple actually had reversal signals on the shorter time frames, but that actually went away today. So we're paying attention, and the 2-hour was able to show a little red bar at the end of the day saying, hey, I could even create a little mini head and shoulders in this type of area to then confirm to the downside. And this is the reason we're paying attention to this on a 2-hour, is just because this is so close to the center line. That's why we were mentioning it yesterday. It is happening. Now we still can bounce. We'll see if we get rid of these signals tomorrow, and hopefully we can talk about some bullishness, right? We can talk about bullishness tomorrow if that does happen. But for the time being, you can see how we reacted down to this low, got that cup, have the handle. Now if we break down. A level like 471 would be important, make that handle again, and then we would just be continuing that negative trend. So I would be very cautious with this. There are things that are escalating on the side of Israel wanting to attack Iran back for what they did last week. So we have to pay attention, because usually the reaction is worse. Usually the reaction to something bad is worse. When someone attacks, usually the reaction is 2, 3, 4-fold. So we have to be paying attention to the shorter time frame, because this is saying downside, and once again the daily time frame has crossed as well. Now, one thing that can help us with the daily time frame for the Qs is the fact that it doesn't have divergences. We know at major tops, a lot of the time the Qs will actually make a lower high. But if this is not going to be that moment, the SPY is making the divergence, the XLU is making the divergence, and the Qs have a lower high. This is all adding up to a lot of major top behavior. So what we want to see here is, from this daily chart, can we find some basing out signals in order to turn back up? That's going to be very, very important going forward. Can we get rid of these signals over the next couple of weeks? That's what I'm going to be paying attention to on this channel. Apple, it's a good thing that a few days ago we were talking about how this could be a double top, and it rejects. We break through, confirming that this could be some kind of double top, and that's going to play out. We try to bounce, we reject. But the thing about Apple that was very, very interesting for me was, throughout the day we were trying to confirm this divergence. You see us with these kind of wick ups. These were trying to hold in this area. It's not dramatic selling. It was trying to hold in our buy zone, and if that would have just curled up, it would be a fantastic signal. But we get rid of it at the end of the day. It's still slightly holding on the MACD, so that could produce some kind of bounce, but you are in an area where things can start to escalate a little bit, especially as the daily time frame has turned down. So you have to be aware of that going forward. We give you the weekly expected moves for Apple, so if we do see a reversal signal by that weekly expected move, we'll be paying attention to it. We will mention that during the live video. Now, as we go over to a 2-hour chart, you're going to notice we tried to curl up with this good move, and we just reject down in negative territory, and we're not even oversold yet. So this can head lower. And if we are going to head lower, well, then this area down here is exactly where you want to react to. Something like 215, you get way down there, and then you see a big handle. Everyone thinks life's good, and then you end up seeing that curl down into negative territory if this can go deep enough. So we do need to see some price action going into tomorrow, but I just want you to be aware how important it is, especially now. We talk about moments like this. We talk about moments where you need to be cautious, and the reason for that is just because we want to be able to react in case something bad happens. Right now it looks like that reaction is justified, and if things turn back up, we will completely change our thinking. But for the time being, we have to treat it as this can be very bad. I hope that it turns up, because that could actually be something bullish if we can set something up. But I just wanted to point out the reason we were bearish on Apple, even with this breakout, was we just said, hey, this could be a fake out because this could be a double top, and look at the divergence it's formed. It crossed down, telling you that the daily scale was going to cross, and that ended up happening for Apple. Not a good look for Apple. Okay, this is not a good look for Apple at this moment. I believe if we wanted to react somewhere, it would obviously be down to these lows, right? Down towards 215. If we start to break that, you're going to go into that negative territory. You're going to go into that negative trend, and that's where things start to escalate. So I would be very, very cautious with a lot of stocks out there today. Tesla, this is a massive signal to pay attention to on the daily scale. You're noticing the double top. This still has the opportunity to be a handle. I want to be very clear about that. This still has the opportunity to be a handle. We're reacting down into our buy zone. So, but I just want to show you on the MACD one more time how significant that is for Tesla, and that has confirmed. When it's that significant, you have to be paying attention for downside. That can really start to escalate. As we go into a 2-hour, you're just going to notice, where is it? It's decently close to the center line. Decently close to the center line. So if that curls up, we get rid of those signals, right? If that can curl up and remain like this, we can go up here, we can create that handle, we can maybe even head higher. But we have to pay attention, as this is negative, for if that is going to be some kind of lower high. You really have to pay attention to that, because you're in a deeper position on this MACD. Now, if we go into a 30-minute, does this 2-hour have a good shot to bounce? It does, and we talked about this during the live video. Watch out if that 30-minute curls over, because it might not just create some structure to head higher, it might go lower and create a divergence. So if we're going to see this bounce, I do believe we may have an opportunity to see a divergence here for Tesla. As of right now, you're really trying to hold up to just stay in a head and shoulders, but if we react react a little bit lower, this is kind of your last chance here for bullishness to come back in my opinion, and that would be with the 30-minute divergence down in our buy zone for Tesla. Now, Amazon, this is really good signals. These are really good signals for Amazon, and we mentioned this on the Patreon because this is where that weekly expected move is, right in this area, and we're reacting off of it right now. That's what we said in the Patreon down in the description. We actually posted this trade setup because this is a great look. This is a great look, and it says, hey, stocks can buy themselves some more time, and maybe Amazon's able to react up to here, get that right shoulder, right? We see this left side over here. We can use this as some liquidity. We get the head, we get that right shoulder. That is what I'd really be paying attention to for bullishness, and you're at a weekly expected move. So Amazon is one of the stocks on the shorter time frame saying, hey, we could see some kind of bounce from here. So that's why it's good to pay attention to Amazon over the next few days. But we'll see if this is going to last, because we had some 2-hour divergences up there and the daily scale has crossed. The thing about the daily scale is this is kind of looking like a big signal that could end up being pretty bad, right? We talked about the fact that when you're really deep on this MACD, we talked about this down in these areas down towards 166.12. When you go down that deep on the MACD, a likelihood of a lower high starts to add up, and that is what is happening at this moment. We can see if those basing out signals turn up those 2 hours and we get rid of these signals. You're going to need that daily to turn back up in order to most likely get back up towards a price point of $200 a share. So this is going to be something key to pay attention to, and then your work's not even done there because you're holding that lower high. You can see a divergence at that level, and that's where you want to watch out. I just want to be very cautious, especially because we're not only seeing stocks turn down, we're seeing things like XOU turn down, we're seeing the dollar bottom, and we're seeing volatility want to break out of some downward trend. Really, the only thing holding up the market, it seems, are things like NVIDIA, things like AMD, things like SMCI, things like that are making the market look better than it really does right now. Like if you're really paying attention, if those stocks were down, we would have been down a significant amount today, okay? If those stocks were down 3% each, we would have been down a significant amount. So pay attention to that. The reason you have to pay attention to NVIDIA right here is if that daily crosses, you're close enough to the center line to go into a negative trend, and this could all be a fake out. We know the dollar has been rising while NVIDIA has been rising, so hopefully retail does not get trapped here. I'm not hoping for that by any means. As we pull up a 2-hour, does the daily have a chance to cross down? Well, this divergence here is really starting to add up, right? You have divergence across all of this. This has not confirmed for the triple divergence, right? This divergence here confirmed, but we weren't able to turn down the daily scale. We go one more time, the timing's a little bit off. And remember, I said in order to remain healthy, 125, we react up to 125, we get that handle, and then we would be a little bit healthier, get that retest and keep going up in that trend. Now we got a little too excited, so now you have to worry about divergences on the MACD, and it is holding pretty flat across that RSI. So there is a chance that this is just a pullback. But if it's going to create some structure to head down, something it could do is react down to a level of about 116.50, start to curl up, maybe look like it's going to break out, go to 125 again, and then curl down, because that would really create some FOMO with that second breakout, and you'd be reacting to a key level that's held with some selling while creating a head and shoulders for NVIDIA. So that is something very key to pay attention to for NVIDIA. But just notice that this signal in particular has not confirmed. But one last thing for NVIDIA, you're up right here is a weekly expected move. The options market only priced in NVIDIA to go about that high for the entire week. This is something that I posted to Patreon as well, and it's because, again, we wanted to create the good structure to head higher in a healthy way, and you're not necessarily doing that. Now, this is not where a weekly expected move is. You do still have room to go up a little bit more, and it's not the best 30-minute divergence, but it is enough to where it says, hey, we could experience some kind of pullback, and then we have to see if that can base out and turn back up for the 30-minute chart. The main signal I'd be paying attention to here, and we posted this to Patreon, but this one here is why I wanted to mention that, is just because this 2-hour is a little bit closer to crossing and a little bit closer to the center line, and I want you to see how steep that divergence would be, on the RSI and MACD at the same time. These type of looks are what curl down daily charts, and if we're going to curl down a daily chart here for something like AMD, then we have to be paying attention. Now, the thing about AMD that's a little bit different, it is further away from that center line on the daily scale than even something like Nvidia. So that could be some kind of pullback, and then we'd have to watch out for something like earnings. So we'll see if this stuff is going to prove tomorrow for AMD. I like the look for some kind of downward play, but it's just a little bit weird that we're seeing in the shorter time frames for something like Amazon, hey, we could head higher, but AMD and things like Nvidia are actually saying we might be tapped out and at least need some kind of pullback, while crash signals, while macro signals are really saying, hey, we could head lower a little bit faster than usual. Meta with a great look. I mean, great look, but it just keeps going up and up and up and up. Now, Meta's another one that does have the opportunity, as it's further away from the center line on the daily scale, to turn down and maybe curl back up with something like earnings. So we will be paying attention. I'm not saying the crash has to happen. I'm saying it's very highly probable with the looks that I'm seeing. And I'm just being genuine, being honest with that. As we look at a 2-hour scale, what do you see down here? Well, we see divergence. Now, that divergence is very significant on your MACD. Notice you are closer to the center line, and that has confirmed. So that's saying that daily scale needs to turn down. If that can go negative, that most likely will occur, but you're kind of flat on the RSI. So we'll see if this 2-hour can base out and we curl up. We still get CPI and things like that this week. So it is a time to pay close attention to some data coming out throughout the week. As we go into a 30-minute chart, the reason that I think we actually could see one more move higher is because things like Meta actually do not have a 30-minute divergence behind those 2 hours. So if we needed to go higher for a moment, really fake people out, well, we're at the center line. So if that's going to be the first thing we pay attention to for Meta tomorrow, is the 30-minute curling up, because it is close to the center line. You can see another move. Usually when you curl up into positive territory, you're going to see what? You're going to see us test the high or go make a new one. So we'll see what has to come with Meta going forward. Is it going to make another move up? And do we see some trap behavior up here? Or are we just going to see this 2-hour really confirm down and just start heading down right now, maybe even curling over a daily chart? AMC had the good signal right here at 437 and did not play out, right? We curled up, we curled back down. That's when you know it's not the moment. We are just curling down and down and down for this one. So this one is just going to need to whip right back around, because you're still holding a divergence point between these two levels. You're still holding that divergence point right there. So that's what I'd be looking for from something like AMC. If we go into a 30-minute real quick, you're just going to notice there's no real reversal signals down here. Maybe you could argue there's a divergence on the RSI. I wouldn't necessarily do that. I think the 2-hour signal is what I'd really be following for AMC. As we go into GameStop, now this one's a little different. You do have a significant divergence on the 30-minute. You do have a flat divergence on the RSI at the same time. So that can reverse around the trend, and we'll have to see if it can get through that key level of 2288. That would take the options market off guard, and that would really send you into some kind of gamma squeeze. So the other thing about 30-minute divergence, they like to turn up 2 hours. Where's that 2 hour? Well, it's close enough to positive territory that if that went positive and doesn't really see resistance, breaks through 2288, that really could see a big move, and maybe this one will be even bigger this time. So we'll pay attention to AMC and GME, but just to be very clear about GME and AMC, this is actively fought against. There are crash signals flashing red, and they are not hiding from that by any means. You did have GME cross over on the daily scale today, and if you want this to head up, well, then you have to hold up right here above that 200 for most likely a double bottom, and then maybe we can springboard off of that and see if we can see something crazy for GME. You notice the DIA, aka the Dow Jones, is trying to give you a little divergence for the MACD. It is not on the RSI at the same time. So you can really see the structure we were looking for from this was the left, the head, the right shoulder, and that right shoulder did form, and you are crossed down. So this is one that on the 2 hour did cross down for a couple of bars already. So if you do not hold up early on in the day tomorrow and this starts to break that level and we hold below it, you can head much lower. And the reason you can head much lower is because the daily scale is turned down. Now this could just be a dramatic pullback. I do not want to get overly bearish. I just want to treat this like these signals show, and they show that they are bad, really bad. And we're seeing things from the dollar and the VIX to make them even worse. So we have to treat them that way. And then if we see those swings up with like a swing trade, if we see those reversal signals at a weekly expected move or a monthly expected move, we will react to those signals. But for now, we have to treat this as they look right now, and that is bad. But if we did want to curl down to that center line and curl up, we can save this thing. This thing can be salvaged. So if you're able to turn down like this, maybe you're reacting back to the breakout area, and that would be an interesting level down towards that 414.85 level is what I'm kind of looking for here. See if you can reach down. grab some buyers and bounce back to the upside. That would be a simple swing trade on the daily scale. But the reason I am paying attention to all of this is because look how that price action is going up. And I want you to look across at this MACD going straight across, even down a little bit. If I hold my mouse here and you see that dotted line, those blue lines there on the MACD are lower. They are lower than the previous ones. If I hold this on the RSI, all of those points down there are lower. If I hold it right here, they're even. That is divergence. That is a triple divergence, and that is a strong reversal signal. If you're going to go make a quadruple one, whatever, that's fine. We will pay attention to those signals. But if we see basing out in these areas, right, we see a 30-minute, a 2-hour divergence or something like that. But for now, this is a triple divergence, and that's not something you want to mess with as far as momentum goes for the Dow. The last one I wanted to talk about was Palantir here, and then we're going to talk about volatility, but I just wanted to show how you didn't really have divergences on the daily scale here, right? We got rid of this one. You pulled back, you crossed up, and positivity to be had. That's great. But now you do have that opportunity to see more downside, because if this just blips like this, you can see a more dramatic pullback, right? We can see a more dramatic pullback, and we'll pay attention because this is still high up on the MACD. So even though we're seeing some crash, though, some bad signals from the SPY and the Qs curling down and things like that, we still can see positivity if this can base out at any time and then see that curl back up. So looking for a swing here if possible, because it's so far away from the center line. And then I'm also looking at the shorter time frames, because the reason I'm talking about this thing curling down is because at the end of the day, we saw a little blip, we see that little red bar, and that has divergence all across this thing. You're seeing divergence all across this thing right now, and that is why you have to pay attention to the daily scale rolling down. Is there weakness in this overall move? This has already crossed down. If that's going to be a blip, then this 30 minutes going to be able to turn back up. It is not dropping dramatically. It is trying to hold up a little bit better, right? We're kind of like this. If you're in a crash, you're going to see it more in a downward direction. So at this moment, we would say this is by the center line. If Palantir wants to make another move higher, it's probably got to do that right away in the morning in the near term, and then we'll look if there is some kind of divergence. That is what we talked about in the live video today. But we also said if that 2 hour just curls down, if this 30-minute curls down too far, you can confirm the 2 hour, and that could just happen right now. So you have to be trading like water. You have to be ready to react, because these signals from Palantir, if they keep going down, you're going to confirm divergence, and right now that's leaning towards a bigger pullback. Last thing I was going to talk about was volatility. I was looking for the reversal signal. We got it. We got rid of it. So this signal right here is what I was paying attention to, because that confirmed, and you did have some hourly divergence up in these areas, and it confirmed. It really said, hey, this wants to head down on a 2-hour scale, but then it turned right back up. When it turns right back up, you got to go, oh, we're getting rid of that signal, and now we're heading up for volatility, which means bad things for the market. And we're trying to break above that trend. So there are no reversal signals here for volatility for the VIX, but we are overbought on the short time frame. I could see if we are going to bounce early in the day, that's really how we can save a lot of stocks. So maybe volatility needs to take a break here. As we open up a 2 hour, you're just going to notice this is pretty much your last hope to see probably a new all-time high. And this is going to be the signal to watch if you're looking for a bullish move to see a new all-time high. And that's going to be this one right here, a 2 hour divergence. Okay, 2 hour divergence is here at a trend line. That's going to be very key. So we're paying attention to it. The thing is, that has not crossed over. This is pointing straight up. So if you want to see that bullishness come in, you got to cross down on this MACD. You got to be able to cross down and go negative, because then you can start to curl down a daily chart. And the reason that we're saying volatility is saying crash signal is because this is it right here. The 50 is across the 200, and it is remaining there. We explained it in the live video today. If you go back and look at the live video from today, you can see us explain and go through some of the previous moments when we called short squeezes because this signal was not here. We are not saying that at this moment because this signal is here. Now, in order to see more squeezing going forward, you're going to have to unconfirm on the daily scale. You're going to have to curl down on the daily scale, which you do have potential right now if VIX can see weakness tomorrow for that 2 hour to cross down, but that could take some time to happen, or we could just pop off right now. Another note about volatility is, even though we're above all the moving averages and this thing looks like it wants to skyrocket, it is up by 17.97%. In crash times, that just does not pull back. It usually just takes off. But in times where you can see a bounce, if we're going to bounce in the market, well, this is where if you're up by 10%, on volatility, then you can see an 85% chance for an update in the SPY over the next 2 trading sessions. So this is what I'm talking about. It pretty much means to me, in my opinion, that we really have to see if we can savor this thing in the next 2 trading sessions, or else it could get pretty ugly. So maybe CPI in 3 days is going to help us out, but we have to pay attention to the next couple of days, because if it gets ugly, it can get ugly fast. But I think the next 2 days are going to say a lot about which way this market wants to go, and then we can pay attention. Is it just a bigger pullback, or is this really starting to escalate? Thank you guys so much for watching this video. The main takeaway today, and I'm going to leave it on Apple because this is not something you want to see, and I just want to leave it there for the end of the video. We are seeing crash signals, a lot of macro signals saying we need to head down. Mix that with some crash signals that can escalate very, very quickly, and October is known to be a very bad month for the market, so we'll pay attention. But we also have the opportunity in some shorter time frames to see that curl back up. So we'll see if the shorter time frames can save us from this macro downside. But if they can't, then I do believe this will be at least a bigger pullback, if not some kind of negative trend. And maybe we end up in a bear market. Maybe we end up getting a stock market crash. So thank you guys so much for watching this video. I think it was a very, very important one. I will be watching stocks with you tomorrow morning, and I do appreciate you guys showing up to the live video and asking questions and things like that. Over the next few days, I will be paying attention to key things that I need to pay attention to in order to dictate which way this market is going during those live videos. But if you'd like to mention a stock, if I do have time, we will look at that for you. So thank you guys so much for joining. I really do appreciate it. I hope you have a great night. And remember, be cautious, trade like water. You'll be just fine with signals like this. All right. Peace.